Good morning, everyone. Welcome to the full year 23 results presentation by Cann Group. My name is Georgina Freeman, Investor Relations with Cann Group. With me today, Peter Koetsier, the CEO, and Deborah Ambrosini, the CFO. This morning, we will run through a presentation with Peter and Deborah presenting, and then at the end, we will open up Q&A. To ask a question, please type these into the Q&A section on your screen, and at the end, we will make our way through these in turn. I will now pass over to Peter. Thank you, Peter.
Thank you so much. It's great that we've got so many people participating again, listening in. Thank you very much to everybody for their interest. Only a few weeks ago, of course, we were sharing a lot of information. Today's focus, of course, is on the full year performance for the business for financial year ending in June of this year. We'll talk a little bit about where we're up to, though, in addition to our progress for last year and the summary of the great achievements and progress we made. And then we'll take a look forward a little bit to the current financial year we're in, which is clearly our focus. So as I look through the financial year 23 highlights, I think there are many. Here we've focused on 6. Firstly, our sales doubled to almost 13.8 million, which is a huge achievement. That's 115% up from the previous financial year and should be a strong indicator, I think, of our progress. In addition to that, we have taken major step forward in terms of our production, both in terms of quality and quantity, and expanding our range, all of which will start to pay dividends as we move through this financial year. And when you contemplate that, we were around about 3 tonnes last financial year in terms of total production, and we're moving to 8 to 9 this year, and then on to the goal of 12.5. It gives you a signal as to the kind of direction and position that we're moving towards as we go forward. So we're right at that point where things are starting to fly. I use the analogy sometimes of an aeroplane. The aeroplane is now taken off, and we're now trying to get ourselves as quickly as possible to cruising altitude, and that'll start to happen as we move through this financial year. In May 23, as a key indicator as part of that, we planted essentially the biggest crop we've ever planted from a commercial point of view. That's about a year into commercial cropping in Mildura, and that should give everyone a pretty strong signal that we are headed in exactly the direction that we plan to be. The other things that are a key note, obviously, thanks to our shareholders who continue to support us through capital raising, which is taking us to the destination that the purpose that we have Cann Group set up for. One of the things that we ended the year on, which was a variation with a key customer, we signed a deal with Levin Health, and that is more important from the point of view that it's a signal to where we're headed in the marketplace. And when you have capacity and quality, it allows you to then give assurance of that capacity and quality to key customers. And I will signal that our intention going forward is to sign many such longer-term agreements with people now that we can provide that level of certainty of quality and quantity. And I think that will start to build a base for our revenue, our sales going forward. That'll give us a great deal of strength. The other piece that making Mildura go to its capacity allows us to do, and that is the sale of Southern facility, a small facility in Melbourne. That allows us to more than double down in Mildura, and realise some of the benefit as we did in 23 from the sale of that facility. Importantly, as I said, more than 100% increase in sales to 13.8 million. The key components, though, as you break it down, you can see there that across the board, the dried flour and oil were substantial. The dried flour is probably the most important thing to pay attention to, in the sense that not only is that a signal of quality, because dried flour needs to be at the highest qualities, but it also is directionally to where the market is. So at the moment, the market is more than 70% in that dried flour space. and I anticipate that as a part of our business to continue to grow faster than the rest of it, but still a strong performance across the board in the big sectors of dried flour and oil. You'll see a lot of the numbers there, which are all pretty impressive, considering that we are still early in production. But we also sent our first small shipment off to Germany as a learning exercise, and that's something that we should look forward to in 24. Is being prepared as we get to scale and we get to quality. The contemplation of overseas exporting is definitely on the agenda. But right here, right now, the market in Australia is booming, and the number of customers that are requesting quality, consistent flour is more than enough for us to meet our financial goals. The other thing that I mentioned, of course, is as part of that, we will attempt to sign longer term deals with our suppliers. That gives us certainty of supply and revenue. So as we look at Mildura, these are real photos from our facility in Mildura, and it is amazing how far we've come. And everything from the way in which our mother stock on the left-hand side is being handled and grown through, all the way through to the size of production, and the last picture there of the amazing quality that is coming out of our facility now. And I would rank some of the crops that we are now pulling out of the facility as the best in Australia. So that's an amazing achievement, only 12 months into commercial supply from that facility. So it's progressed all the way through. It's been a long process of build, but it's now being realised. And I think that's the key message here is 23 was the pivot point. And as we go into the rest of this financial year, we're on track to realise the volume that's in there. Importantly, we have staffed the facility in order to meet these new production quality and quantity needs. And increasingly, we're becoming a very important employer in the Sunraysia area, and we're very proud the role we play in that part of the world. So it's been an evolution, and without going into huge detail, we have made amazing progress on our breeding, cultivating, and genetics program for Australian quality product. We will continue to do that over time. We'll continue to improve the genetics to increase our range. We are now in the place where we can offer a full service business, all the way from growing plants all the way through to packing at a GMP facility, which I would rank as the best in Australia at the moment. And as we produce more product, it's not hard to understand that when you plant more product into that facility, that we will achieve economies of scale, which will be substantial, and we will see improved margins as we grow more and sell more. And then lastly, the board has evolved into a place where we now have strong support from management and through the board membership to create a powerful future for this organisation. So without further ado, I'll hand over to Deborah to just talk us through the top line financial results.
Thanks, Peter. Sorry, and thanks to everyone who's listening today. As Peter mentioned earlier, Cann increased its revenue from sales of products and services by 150%, or nearly 2.2 times what it was in FY22, to 13.78 million, due to increased new and repeat orders for our high quality products coming out of Mildura at the moment. Total income, including other sources of income for FY23, grew to 21.68 million. Additional income recorded included accrual for R&D rebates, for the R&D rebate for FY23, and a gain on sale of southern facility land and buildings. Operating expenses increased in line with expectations after the company officially brought the Mildura facility online, leading to increased cultivation, manufacturing and staffing costs during the year. As we now increase production levels, though, we anticipate achieving economies of scale into FY24, which should improve the margins in our products. Other notable expenses recorded during the year included significant research and development costs incurred for the S3 clinical trial, which we have also included in our R&D rebate claim for FY23. Increased interest rate expenses as a direct result of the interest rate rises during the year, and additional depreciation and amortisation after the company began amortising the Madura facility in the last quarter of FY22. I will now hand back to Peter, who will provide further details on the strategic outlook for FY24.
So if you're like me, you are focused very much on the future. It's important to celebrate the achievements of the last financial year, but we are pushing very hard towards what we're going to be in the future, which is very exciting. And I think if you look at the trajectory that we've already made with respect to sales and even some of the profitability amounts without really stepping into the space the way that we're intended, I think that sends a signal about the direction we're headed. It's obviously been a long journey, and there may well be people on this call who've been with us for a number of years, who've supported us and allowed us to get to the place that we are. And I would say to you, thank you, and we're about to start to deliver on the promise, and that with quality and quantity the way that it was always designed to be. And that journey, whilst I've only been here for half of the last financial year, that journey is really picking up pace now, and creates a huge amount of optimism about where we're headed in this financial year. So there has been some change, including myself, in the last 12 months. And today, if you look at the ASX announcements, you'll see that Alan McCallum, who has been chairman of this organisation for more than 7 years, has decided to retire. And as part of that, the transition to an existing board member, Dr. Julian Chick, has taken place as of today at midday. And I'm very encouraged to be working with Julian. I think he brings some amazing skills and experience to help us onto the next phase of the business. This slide I just put in just to remind us that we're right in the middle of the capital raise, and to remind you of the key points that we talked to about the market size and our trajectory. But maybe, I don't know, Deb, if there's anything, we're right in the middle, so I don't know if there's any updates you want to give.
Yeah. Firstly, I just want to thank the shareholders who participated in this space. We really appreciate your support. But as we announced, we completed the raise back in August this year, or not so long ago, where we raised 4.46 million through the non-renounceable rights issue. We now have 3 months from the close of that offer to place the shortfall to sophisticated and professional investors. And as we've previously announced, PAC partners have been appointed to undertake this role for us. We have begun the initial discussions involved in this process, and we will update the market as we progress the process at this stage, at the early stages.
So it really is nice to have an exciting message to take to the marketplace about where we're at. And as I said, the plane has taken off, and we're heading up in altitude to reach a new cruising altitude that is impressive. For me, this next financial year has 3 key pillars. We need to make sure that the scale and quality of production continues on the planned trajectory. And so far, so good. Everything is progressing exactly as we would have hoped. In fact, I think the quality has come in perhaps a little earlier than people expected. And that is, for us, a signal of the future. It also means that as we scale up, it allows us to extend our portfolio to meet the market needs. The market requires not just one flower or one type, it requires a range. And as part of that, we do have a huge history of genetic development. And some of those genetics are actually brand new genetics are being grown in the Mildura facility right now. And that we will continuously, as we end this year, and as we get into the first quarter of next year, we will introduce even more genetics in 2 new waves. And that creates not just new and innovative products that are higher quality, but it also allows us to offer different things to different customers. So it is a great opportunity for us moving forward. And then lastly, the team, myself and everyone is 100% focused on getting revenue as part of all of this. So we produce great quality product at huge quantities compared to what we've done in the past, with an extensive range we are solely focused on making sure that that product is sold and available to Australian patients this year. And as we do that, that fundamental change will see the cost of production per gram come down dramatically, and also our revenue increases. And that is taking us to the place that we must be, which is EBITDA profitability as we move into the 25 financial year. So with that, only because it was a few weeks ago, the story remains the same, which I think is a good thing. But it's important that we answer the questions that the marketplace has. And Georgina, maybe there's some questions that we've received during the presentation.
Yeah, thank you, Peter and Deborah. So just a reminder for all those on the call to ask a question, please submit your question into the Q&A section on your screen. So Peter, we do have a number of questions, so I will try to group them if I can. But the first question says, well done on a great top line result. Do you think you can sustain the current rate of growth?
First of all, thanks to the person with the question and the compliment on the top line results. I think the answer is, without really pushing the maximum production through the facility, we still managed to grow at 115% in the sales line, and that was at a 3-ton production. And I don't want to necessarily promise what our revenues will be going forward, and I don't know that's necessarily appropriate. However, we are moving from 3-ton to 9-ton to 12.5 tons. So I would be very surprised and very disappointed if our current rate of growth doesn't continue.
So the next question is more around the revenue by product, with oil and dried flour representing majority of sales in full year 23. Can you provide insights into how you think about these products in terms of margins, and how do you see the category split evolving over time?
Yeah, at the moment, the split of some 77% of units being for dried flour seems to be pretty stable. There is likely to be launches of other forms in the next couple of years, things like vapes and edibles, but I think dried flour remains the mainstay for the short term, at least, over the next 12 to 18 months. And it is also the basis of good quality products. So that's where our focus will be. And you'll see, as a result of that, substantial growth being focused in that area in the business. Oils will always remain a strong component of the marketplace. And from a margin point of view, the higher the quality product for patients, obviously the more willing they are to pay for that. And inhalable flour remains a higher margin product if we can make the quality the way that we are right now, consistently over time.
Thank you, Peter. This next question, how will the growth of these sales translate to investor ROI? Are there further investments planned, or are the bulk of investing expenses finished?
Yeah, we're in a great place that the capital expenditure is largely complete for the facility. We will have and the remaining investment in the facility and in the business will be focused on operational acceleration. So whether it's a multi-head filler, which allows us to put product into jars quicker, or whether it's an increase in staff, we're already on the pathway for that to improve our outcomes. And those are obviously linked to more production and hopefully to more sales. So that's a key component of what we're going to be investing in the future. But the facility itself is almost completely finished. So it's never over completely, because there's always tweaks and improvements and changes and preventative maintenance. But largely the facility is built to get us to the 12.5 stage. So my sole focus is to get Mildura production faster, bigger, better. That's where all the money is being put aside. But maybe, I mean, from a total investment point of view, the ratio of sales to investment will obviously change dramatically as we production.
So, Peter, this question actually refers back to your previous 4E, the full year 22. The company's previous 4E stated a new high CBD cultivar is proceeding through commercial trials. Is this cultivar now available for patients as a flower product?
It's a great, very specific question. And I would say the answer is we haven't taken that as a priority, although we haven't given up on that by any means. In fact, we've got some great genetics for high CBD inhalable flowers. What we have prioritised, though, is where the market is, which is much more focused on the 20% plus THC inhalable flowers. So we've been moving very fast to try and meet the needs where the vast bulk of the market is at the moment. But there is a definitive plan to move the CBD flower ahead. And we, as I said, we do have some fantastic genetics in-house for that. It's just a matter of priority. So it's the answer is yes, just not quite yet.
Okay, thank you, Peter. So this next question's got a bit of an introduction to it. Labor are introducing a bill later this year to facilitate a trial aimed to test when users of medicinal cannabis can safely drive. The trial, proposed to take 18 months, has been criticised for the process taking too long and that medicinal cannabis patients need to be treated in line with any other patient taking prescription medication. Can you please provide a view on the proposed trial and what would a change in legalising prescription medicinal cannabis for driving mean for the business?
Yeah, it's a big question for a short period of time. I think this is both good and bad news, I believe. The good news is that there's a recognition that things need to move forward. There's a recognition that things need to change. And there is a recognition in the Victorian government that there needs to be a process to move towards allowing people who are getting medicinal cannabis legally through a prescription are treated like anyone else who's getting a prescription. And that is with the test to be more about impairment than it is about just absolute use of the product. And I think that's probably the key component to it. However, it's understandable that there are a number of people who are very disappointed that A, that the timeline is going to take so long, and B, that this is all done in an 18-month period out of the normal driving conditions. So I think, I don't know that we've heard the end of this story. As I said, good that there's progress being made, but disappointing, I believe, that it's going to take so long, considering the evidence that we have in front of us. And considering that all that's being asked for is for people with these types of prescriptions to be treated the same as everyone else with a prescription, and I'm not sure that that lack of fairness is necessarily appropriate. I can understand that governments tend to be cautious and move slowly, but this seems to me like, and we haven't seen the full details yet, this seems a little bit slow for patients, I believe. And from a market point of view, there's no doubt that if the driving laws changed, that the market would accelerate even faster than it is right now. And the market is growing very fast right now, both from the point of view of existing users being able to use more products through the day, but also there are probably people who are taking things like opioids and benzodiazepines right now who aren't switching to medicinal cannabis simply because of the driving laws. So, and that in itself is obviously quite concerning. So hopefully things will be further debated, but as I said, good and bad news.
Thanks, Peter. The next question, how is Cann going in meeting any sustainability requirements moving forward? Will more resources be required, and how will that impact the business?
I think we all believe that we have to put more and more focus on sustainability. As a startup business, it doesn't tend to be your core focus, but as we start to get into higher production, there are a number of projects that we need to prosecute with respect to our sustainability and our ESR platform, our CSR platform. I think there are some things that we could tick off as an organisation that we're very proud of. Firstly, ours is an agricultural product, and it's grown without pesticides, without any interference. So it's naturally grown from that respect. We are, as we've talked about, a great employer in a rural regional area, which we're very proud of as well. We have a number of programs that allow all people from all walks of life to work in our facility in Mildura particularly, but across the company, which we're also incredibly proud of. Our view now turns to, as we put production up, to probably two key areas. One is the power consumption, and I've talked a little bit about that in the capital raise, but that's definitely a project that's already being worked on, about how we can get more sustainable power into the facility. And then the second one is about waste, and there are a number of local growers who are talking about various ways that the waste product, which is plant material, so it's not horrendous waste, but it is waste that needs to be contemplated, and how that might be reused, how that could be utilised in a number of different ways, from fertiliser to animal feed, are all being contemplated by the industry right now. So the answer is, it hasn't been, naturally, as a startup company, it hasn't been a massive focus, but it will become an increasingly important part of what we think about and do. And as I said, there are a number of projects that are already underway that will take a while to be realised, but I remain definitively committed to our CSR, ESR. We are, this is not just a business, it's part of society and part of the community, and I want every one of my employees to come to work feeling proud of who we are and what we're doing for society, and that's something that we'll never stop thinking about.
Thanks, Peter. Sort of turning back to the capital raise. With the capital raise, did it meet Cann's expectations? The target was around 13 million, but only 4.5 was raised. Was this disappointing?
Look, first of all, the target was 11.7. We're right in the middle, so I think it would be really premature for us to make any great big comments about this. It's running until October, so let's maybe park the answer to that question until we get through the next few months and understand where we've landed. The only comment I'd make is I continue to be thankful to those shareholders that remain loyal and support us, and very appreciative of their trust in us. And we will talk more about the capital raise when we get closer to the end.
Thanks, Peter. This next question is short and sharp. How long before Cann is profitable?
If only it was a short, sharp understanding of a crystal ball that I could tell you exactly the day that we could all put in our calendar. The first answer to that question is as soon as possible. I have no... my key focus is to get us there as absolutely as quickly as we possibly can. So no one on this call should be have any misconception that we aren't 100% focused on making that happen. But if you look at the scenarios in terms of production schedules and the way that we're moving through things, in that financial year 25, EBITDA profitability is entirely likely, possible, is definitely our goal. So if we can get more profitable quicker, if we can move the timeline forward, believe me, we will do it. We owe it to everybody on this call and also to our total organisation to be as profitable as quickly as possible.
Thanks, Peter. So the next question, what potential lies in the overseas market compared to the domestic market?
Obviously, the overseas market is big and it has great potential. There's always going to be changes. Germany has taken the first step potentially towards legalisation, and those things will change the dynamics. There are obviously lots of opportunities across Europe that we could participate in. But to be perfectly honest, and we do have plans as we go through 24 to look at that more seriously as we have the capacity to do so. But right here, right now, the market in Australia is fast and it's growing. And that is our single focus at the moment, is to provide the kind of quality and quantity that the local market is demanding of us. Once we start to get closer to that achievement, then we can start casting our eyes in 24 towards the overseas markets. Although we have sent some product overseas, and we will continue our work to develop and understand the future pathway forward. In 23, our focus very, very much is about local production and local sale.
So the next question is on automation. Enhanced automation for manufacturing processes has been called out as a key focus for improving operating efficiencies. What current manual processes are you focused on to transition to an automated process? What is the timeline and what is the benefit?
Again, quite a huge question to answer, because there are multiple things, big and small, that we're trying to do in the organisation of the way we're doing things, particularly in Mildura, in order to make that reality. The biggest one probably to focus on, which is easier to explain, is we've ordered a multi-head filler. And maybe next time I can show a picture of it. It's quite an impressive looking machine. And that, for instance, is probably our strongest example where there'd be a major step forward. At the moment, we have our wonderful staff in Mildura hand filling with a scoop into the jars, weighing them, making sure the correct amount of product is in there before putting it on the line for it to be automatically capped off and labelled. What happens instead is that staff can be liberated to do other things, and we really do need them to be liberated to do other things as we start to push production. And the multi-head filler automatically fills the jars at a much faster rate and with precision, in a way that allows us to really do two things. Firstly, substantially speed up the manufacturing process and production for finished goods, but it also allows us that multi-head filler can be used for other people's products. So as a quality GMP facility, with the TGO 93 changes July 1, there are a number of companies who are bringing bulk flour in, or have bulk flour, who would ideally like to have it packed off in a GMP facility. At this point in time, we're doing a little bit of that, but a multi-head filler will change that. So that'll be another revenue source for the organisation as well. So the multi-head filler is probably the best and easiest to explain example of automation, but there are many others, big and small, as I said, that are all directed towards speeding operation and getting our production facility to maximum as quickly as possible and to improve quality.
I will also say that it's not just automation that we're looking at for improving efficiencies and operational efficiencies. We're also looking at different processes and different ways of doing things to cut time and improve quality. And we've already achieved quite a few things, better quality in doing it that way now, since we opened up the facility back in April last year. So there's a number of things we're doing to cut costs and to improve the margins on the products.
Thanks, Deb.
Thanks, Peter and Deborah. This next question, what is your strategy for increasing the customer base?
Well, it's actually relatively straightforward to explain, in the sense that if you have a broader range of really high quality product at a consistent supply level, it's far easier to go to new and existing customers and ask them in a marketplace which is demanding high quality flour, particularly locally from Australia. It's actually pretty straightforward. The equation is quite simple. So more product at high quality allows us to improve existing and future customers. And already as an organisation, we are now, as we've stepped into financial year 24, we've started to speak to a whole lot of new people who perhaps in the past, either for quality or quantity reasons, weren't necessarily with us. And we are hoping that over the coming months, we will start to, and I feel pretty confident that we're going to start to attract a whole lot of new customers to improve our base. But importantly, not just new customers. There are existing customers who, as we get better with what we're doing and we provide a better range, existing customers will start to also want more of what we've got. So it's from here to the end of the financial year, assuming we do everything that we're planning and we're currently in the process of doing in Mildura, I feel incredibly confident that we're going to have a whole new base of customers going forward.
Great. Thank you, Peter. We have now exhausted the group. I will now pass back to yourself for any closing remarks.
Listen, I don't want to say too much except to say a huge thank you to my team, particularly the team up in Mildura, who in the financial year 23 did amazing things to turn that huge project on, and to get it so quickly to the stage of such high quality, and to really make us all feel really confident that the production levels that we're planning are very close, and that as we progress through this financial year, we will start to maximise quality and quantity within the organisation. The other thing that I would love to say is that, and we've said it a couple of times, I am so humbled and appreciative of the support that our shareholders have given us. I know we've come back a few times to ask for money, and we've seen amazing support from those people. And I would say to all of those people, and also anybody who is in the future wanting to invest us, we are at that exciting point, that point where we're about to realise the dream. And whatever the frustrations or impatience that have been there, we feel them, but we're right on the verge of making things that are exciting really happen in that facility and in the marketplace. And then the other part is, I feel very proud that we are helping patients. Every week I'm reminded of patients' stories of how significant it is, the product that we're making. This is not just any product. This, for some people, is life-changing. So our commitment to quality is not just about making it available for sale, but it's also to the patients we serve. As we go forward, we'll continue to share more information with you. The two things I would encourage you to do is go onto the webpage. The team has done an amazing job to update our webpage to reflect where we're up to right now. It also obviously contains the full annual report you can download and read at your leisure, as well as news updates all the time. So, as I said, I think a few times the last couple of calls, we are committed to try and keep everyone much more plugged into what we're up to, because of the exciting journey that we're on, rather than just waiting, at the end of quarters or years to tell people that our progress. So I'd encourage you to sign up on all the social media platforms on our webpage to take a look at everything that we're doing, which we're really proud of. So it's your company. Stay plugged in, and we'll commit to update you and share as much as we possibly can.
Thank you, Peter. That now concludes the presentation.